Egon, it seems that there are so many different really fundamental drivers in place for gold right now. And I just wanted to get your take on how you see the importance of all of these fundamental drivers. How would you list the top drivers for gold at the moment?
Well, there's so many drivers depending on the era we are in. Gold can go up in inflation, can go up in deflation. Over time, this is a very, very easy investment to understand and to analyze, because over time, you can go back thousands of years. No single currency has ever survived while gold has maintained its purchasing power for several thousand years. And that basically is the answer to your question. So that's number one. Whatever money is created by leaders of countries or central banks, that money in the end is always destroyed, because every country in the world is living above its means once it gets over a threshold, when all of a sudden the illusions of grandeur, they don't last anymore, but the grandeur doesn't last, and countries are then running out of money and starting to print money, running deficits, and then high debts, and then the currency is debased, and then in the end the currency becomes worthless. Since 1700, there are 500 currencies in the world have become extinct, most of them through hyperinflation. That is the answer. So easy, really. When you look at gold, we don't look at it as an investment. We look at it as wealth preservation. I think it is an investment because in relation to certainly cash, it outperforms cash dramatically. Every cash that has existed, every money that has existed has gone to zero. So from that point of view, it's easy. There are times when other assets outperform gold, but right now I think gold is at the point when it's just not going to be just wealth preservation. It's going to be a major wealth enhancement also, because there will be major moves away from other asset classes. So number one is that what drives gold is the destruction of paper money. Since you know that governments and central banks will continue to do that forever, since they've done it for thousands of years, that's why it's so easy to hold gold. Gold has periods when for a long time when it goes sideways. We take from 71 when it was fixed until 71, of course, when we had the gold standard, and it was at $35. As we know, that it went to in 1980 to 850 from 35. And then because of that very quick move, it corrected for 20 years and came down as far to 250. So went from 35 to 850, back to 250. And that's when we went into gold at the beginning of this century. And we averaged in on at about 300 and haven't obviously sold anything, but added only since then. And that's what our clients do too. They're wealth preservation clients. They're buying it without having to look at their price on a daily basis. They never do. That's not what you should do with gold. Gold is real wealth, and therefore you never have to worry about the value. So that's your first backer of gold, your governments and your central banks, because they'll destroy your money. Number two, there are, of course, that we are seeing right now and going to sadly see more of, which is war. Major wars will drive gold up because uncertainty in the world is obviously a time when people acquire gold, a matter of safety. And so if you combine that now with the third factor, which is, of course, the deficits and the increase in debt. You just take U.S. federal debt when Reagan became president, it was just getting up to 1 trillion. And now you're talking about 34 trillion. And, just at the beginning of this century, it was 5 trillion. So we've gone from 5 trillion to 34 trillion just in this century. These figures is just unbelievable. And, it means, of course, that the world is bankrupt and the US is more bankrupt than any other country. Of course, no one is ever going to repay the money. And, I have, of course, written about and worried about a lot the derivatives outstanding. Officially, BIS, who keeps the statistics, Bank of International Settlement in Basel, they stated to be just under 700 trillion. I think that's nonsense. I think, it was double 10 years ago. They just halved the figure. I think they took out the other side, which is of course, wrong, because you can't, if a counterparty fails, gross risk remains risk because nobody pays on the other side. So it should be the gross amount. So it's over a quadrillion. And, if you include shadow banking, etc., I think, and that is not recorded, nobody knows what it is, because there are so many bets on bets on bets through hedge funds and finance companies outside the financial system. So it could easily be several quadrillion. And that's going to fail. And that initially central banks will help and governments and create debt out of that. But, banks will fail. central banks will fail, and countries will fail. And that's what I see in the next few years. So the debts and deficits, that there is no solution to that. And even, of course, we talk about the Western world, especially the US, as being a leader, the debt king, if you want. But you look at China's debt picture also. That looks pretty grim too. So, and China is not going to solve that easily. The only advantage China has is that it's mainly a domestic debt. So they're not borrowing from the rest of the world like the US is by all these dollars that have been created, petrodollars, etc., around the world. So therefore, China will deal with it internally, but China is going to suffer dramatically. As you know, the massive property speculation, for example, with empty properties in China. The interesting thing is now that you're getting all over the Western world also empty properties. Office properties in most countries and in many states in the US are now standing vacant up to 50% in many places. And the property or real estate loans in banks is turning so sour now that in itself, I think within the next year will make banks go bankrupt. So just that area is a massive problem. Then you have all the personal debt and corporate debt, etc. Private equity, for example. I mean, that's the biggest bubble ever in my view. And it only works as long as the music is playing. When the music stops, those values that private equity companies pretend that their companies are worth, they're not real. When the stock market starts going down, there's no chance of selling these investments, or these private equity deals will be worthless. So there are so many areas now within the financial world and the banking world. Everything comes out when there are problems. I mean, I remember in periods like in the 70s, you go from early 70s, good times, everybody spending. All of a sudden, times turn bad, stock market crashes like in 73, 4 by 2/3. And of course, then a lot of things have been swept under the carpet, all the bad things, and they come out. And this is when you get, like we had in the early 70s, you had banking collapses, you had savings and loans in the US, etc. And so we're going to see that again. There's no chance for this banking system to survive. Of course, they will restructure. Of course, they will come up with CBDCs, central bank digital currencies, but they're just another form of paper money, fiat money. It's not going to solve anything. It's just going to be an illusion for a while that, we sweep the old debt under the carpet. Now we have new money, but the old debt is still there. And the assets that the old debt were backing, if that's just made to disappear, the debt disappears, the assets will also implode. And that's what we're going to see in coming years. It'll be a very difficult period for the world. But there is no other way. There's no way to solve this, Tom, by printing more money, and then there's obviously no government in the world is going to just slash expenses by 50% because that's politically impossible and a political suicide. So they'll continue to print money until it becomes properly worthless. As I said, the US dollar is down 98% since 1971 when the gold window was closed. It's only 2% to go. But of course, that 2% is 100% from now. And that's going to happen in the next few years. So anyone talking about dollar being strong, well, it's been a little bit stronger relatively for the last few years, but that's totally meaningless. There's no prize for being second to the bottom. They're all going to go to the bottom. Where the US dollar comes a little bit behind one or two other currencies, I think the dollar will start a real move down relatively soon. So we will see worthless currencies and we will see a reset, which is not a reset that has been constructed by someone. It's just an accidental reset, if you want. And that's the only way that the world can come back to parity again, because we cannot grow. The world cannot grow from a debt level of 100 trillion in the US total debt. And as I've been showing, the US federal debt, which is now 34 trillion, it doubles since Reagan, for example, is doubled every 8 years on average. So Reagan, it was, as I said, just under a trillion, and now it's 34. So it's doubled every 8 year on average. For the federal debt takes us to 100 trillion by 2036. And I think that's conservative because I think it's going to get worse. I think deficits are going to get bigger. If interest rates go up, as I expect also, interest rates are now artificially low. The Fed is not going to have any chance of keeping interest rates low. The market, especially the long end of the market, will pull them up. And I wouldn't be surprised to see 10% interest rate or more, like we saw in the 70s. And of course, if you take 10% on 100 trillion debt, take 10 trillion interest, that's what, 2.5 times the US budget today. This can only be resolved, as I said, by an implosion of the current system, which will lead to massive suffering. We have to start without a debt. That's the only way that the world can continue to grow long term. Of course, It means starting from a much lower level, but hopefully a much sounder level also. And then, take another 100 years or more for the next bubble to appear again. And that's the history of the world's financial system and the world economy. So these are just cycles. It's just that I think we are at the end of a major cycle now. That could be a 200-year cycle or a 2,000-year cycle. We'll only know afterwards. So therefore, the correction now will be bigger than it has been for a long time, because also you're looking at this time the whole world. That we've never seen that before. We've never seen such a bubble in every part of the world, in the West, in the East, in China, in emerging countries, etc. And that's why the fall will be much greater now than we've ever seen before. Before, it's always been a region or a country that could be saved by the rest of the world or ignored. But now it's actually the whole world. Intellectually, it will be fascinating for observers like you and I and many others who are actually looking at this on a daily basis. Humanly, it'll be horrible. Then link wars to this, which I think is inevitable. The US doesn't want peace. The neocons in the US want war. They want war, but they know the consequences of nuclear war. So that's a dilemma they have, because a nuclear war is the end of the world for most people. Nuclear war is not a solution. They know that. There are a lot of trigger-happy people in the world, especially US neocons. And of course, sadly, you have a president who is not in charge, and he's being guided by other people who are unaccountable. And that makes the situation for the world much less secure than it should be. That was the long answer to your question about gold. All these factors will drive gold. And then, of course, you have the BRICS countries, and they will continue to invest in gold like we're seeing now. And then also, as I have been writing about, I think that central banks, especially since the US decided to freeze or confiscate the Russian assets, central banks will no longer hold their reserve assets in dollars. That's absolutely certain. They can't shift overnight. We're seeing a gradual shift already, especially in the BRICS countries. So it means that dollar will not be a reserve asset anymore, and it will take some time. And the only obvious alternative to a dollar is gold, of course. Central banks are going to hold gold as the reserve asset. So there'll be major shift into gold from central banks, from the BRICS countries, and because of all the problems that I've outlined, also normal investors, funds, etc., will go into gold. I'm not a gold bug. We went into gold 25 years ago because we saw the problems in the world coming. We saw the end of a major cycle, and we decided the best way to protect your wealth is by holding physical gold, obviously outside the banking system. So, we're not gold bugs at all. And I don't care about what happens to gold tomorrow or in 2 years' time or whatever. I know that this is the best way for myself or for family, for our investors to protect their assets. It's very simple, has been throughout history, and will continue to be.